Hello guys! Welcome back to the channel. I just want to thank those of you who watched the last video I posted. If you haven't watched the previous video yet, I recommend going back and watching it first, so you'll be more comfortable with this one. In the previous video, we talked about the difference between debits and credits in accounting. Today, we'll use some exercises to reinforce what we learned. In this video, we'll focus on a service company to understand how journal entries are made and how debits and credits are used to record the effects of transactions on different accounts. We're going to do an exercise where I'll give you 10 seconds to answer each question. After that, the correct answer will be displayed. This will help you understand that in accounting, every single transaction affects both the debit side and the credit side, so that the accounting equation always stays in balance. Without any further ado, let's get started. October 1st. Cash of $7,800 was received in exchange for common shares. Answer: debit cash $7,800 and credit common shares $7,800. We debit cash because cash increased, and we credit common shares because owners' equity increased. October 2nd. Y company borrowed $3,000 from a bank. Answer: debit cash $3,000 and credit loan payable $3,000. Cash increased, and the liability, loan payable, also increased. October 3rd. Y company purchased equipment by paying $4,000 in cash. Answer: debit equipment $4,000 and credit cash $4,000. October 4th. Y company paid $500 for office rent for the month of October. Answer: debit rent expense $500 and credit cash $500. October 5th. Y company paid $700 for a one-year insurance policy that expires on September 30th of next year. Answer: debit prepaid insurance $700 and credit cash $700. Keep in mind that prepaid insurance is an asset because it represents future benefits. The expense will be recognized gradually as time passes. Since this policy covers 1 year, the monthly insurance expense would be $700 divided by 12, which equals $58.33 per month. We will record that later when we talk about adjusting entries. October 6th. Y company hired 4 employees who will begin work on Monday, October 15th. Each employee earns $600 per week for a 5-day workweek, and salaries are paid every 2 weeks. Answer: no accounting transaction is recorded on this date. At this point, there is only an agreement. No work has been performed yet, and no payment is due. October 7th. Y company purchased supplies on account from PX Limited for $3,000. Answer. Debit supplies $3,000 and credit accounts payable $3,000. We use accounts payable when goods or services are purchased on account, meaning no cash is paid immediately. October 8th. A client, DX, was billed $11,000 for services provided. Answer. Debit accounts receivable $11,000 and credit service revenue $11,000. Accounts receivable is used when services are provided but cash has not yet been received. October 9th. $1,500 was received in advance from customer Z for services to be provided in December. Answer. Debit cash $1,500 and credit deferred revenue $1,500. Deferred revenue is a liability because the service has not been provided yet. October 10th. Y company declared and paid $500 in dividends to shareholders. Answer. Debit dividends $500 and credit cash $500. October 11th. Y company collected $5,000 from customer Q on account. Answer. Debit cash $5,000 and credit accounts receivable $5,000. If you got all of these correct, it means you have a solid understanding of this concept. In summary, you can see how debits and credits keep the accounting equation in balance. Total assets equals total liabilities plus owner's equity. The table shows that total assets of $25,300 are equal to total liabilities of $7,500 plus total equity of $17,800. This happens because every transaction affects at least two sides of the accounting equation. Thank you for taking the time to watch this video. If you know someone who might find this helpful, feel free to share it. And please let us know if there's anything we can improve. Thank you, and I'll see you in the next video.